Okay, let me just do a sound check before we get really started. Okay, I see that things are moving. Let me just make sure, guys, that people can actually hear me. And there goes the guy that's painting the office. Hello, hello. Hello, hello, hello. Is this working? Do we have audio? All right, looks like we have audio. Okay, so welcome to 14 minutes before the open of the London markets. And where should we start? So let me review data yesterday because we were surprised. JOLTS data came in strong yesterday. At least the job openings came out at 7.39 million. Although actual hires and actual job loss or separations, they were more or less just steady. Nothing impressive from them. But still, this is considered to be a surprise because these are times when you keep hearing from the news about some major corporation cutting their payrolls, cutting off people. You hear about how Microsoft or IBM are laying off people and replacing them with AI. So one would have expected that the numbers would turn out poorly, but there are actually more job openings. I don't have the data on this sector breakdown for this, so let's just say that it's still overall a surprise. And when you translate that to the financial markets, what we saw was a stronger dollar across the board. Although we have to point out that even before JOLTS data was released, we already saw the dollar strengthening. All right, that said, what is there in store for us today? What do the calendars have for us? So let's take a look. It's Wednesday, and we have ISM for the services sector later. By the way, ISM turned out to be a surprise last time for the downside. Last Monday we had ISM manufacturing, and today we'll be seeing the services sector's ISM data. What is ISM again? ISM data is basically it's a diffusion index. It's a soft data. It's a leading indicator or a leading data, meaning it's not a measure of actual economic results, of actual economic activity, but it's a measure of the sentiment of purchasing managers based on what they see from hiring trends within the company, from their purchases of raw materials for their activities. Although in this case, we're talking about the services industry. Okay, from basically it's about sentiment of the purchasing managers based on what they see of the pipeline for their company's services, their company's activities. Now, consensus forecast is actually a very healthy figure later. We have services PMI expected at 52.0. What else is there that's going to be interesting? We have ADP non-farm employment change data as well. So more jobs data. This one calling for a strong figure, a strong read. I guess people who got axed by Doge are seen as finding jobs in the private sector. I don't know, but the numbers are impressive. At least the forecast is calling for an impressive number, 111,000 from 62 before. And anytime you talk about 100,000 jobs getting created in the US on a monthly basis, that has to be seen as good. Okay, I know we've seen numbers before around the 200s, 300,000s, but folks, for an economy the size of the US, 100,000 is good. For a mature economy like the US, 100,000 is good. I remember during the time of President Clinton, we see 150,000 number for non-farm payrolls, and we say, wow, that was pretty strong. The economy is going all cylinders. Although again, there are perceptions involved here when you look at these numbers, and maybe I guess part of this is that we are seeing a lot of mainstream news about job losses and everything that we tend to think in terms of a depressing situation. So in any case, it looks like the numbers later will be potential excuses for us to continue seeing a stronger dollar. Okay, at least that's what the economic expectations are. Other data to watch out for, you have you have an interest rate decision from Canada later. Nothing expected there as far as changes in policy is concerned. It would be interesting to note if the BOC will be thinking in terms of a need to actually lower rates in the future, given all the economic challenges that Canada's facing. So a lot of things to watch out for later in the US session. For now, not much for the European session. So we will stick to the charts as far as Europe's concerned. All right, so let's start off with Euro as usual. And what should we be doing? Well, let me draw some trend lines first. See what we have. Okay, so that's our main trend line for Euro on the daily chart. We also find ourselves above our exponential moving average. Looks like we have some calls for mean inversion as far as the daily candlesticks are concerned, although we don't actually have a reversal pattern here. So bullish pattern, okay, this is the big question. You have previously seen a series of lower or higher highs and higher lows, but this one here, we've had a lower high situation. So are we going to invalidate that, or are we pulling back some more? We'll see. As far as the day's range is concerned, what do we have here? High for today is at 1393, lows at 1357. So you're talking about 44 pips of price action only. Average true range for this, let me see. Our average true range is 95 pips, so we have room to maneuver. Okay, so bullish trend. We've actually pulled back before to the trend line, but it looks like we don't have a lot of excuse to press the buy side. But let me see this intraday. Do we have an excuse to press the buy side or not? Okay, intraday, what do we find? Current hour is actually pushing up. Okay, this is interesting. This is our moving average line, our exponential moving average, and current charts, current price action show us testing that exponential moving average. I'm thinking in terms of, can we get, okay, let me just go to the dailies first. Okay, so here's what I'm thinking, guys. If you're someone who is thinking long term, then obviously you want to just join the buy side whenever you can. But if you're a long term swing trader, the best entry for the buy side would be coming from your exponential moving average, coming from your daily trend line. So I guess the thing that we need to know now is, over the next few hours, will we be seeing mean reversion to the moving average line? Will we see prices drop to this area? And what kind of signals do we need intraday that says, okay, I'd like to join that that drop? Okay, so can we get to the trend line over the next couple of hours? Now, if we go intraday charts, what do we have? We have a pattern of lower highs and lower lows. Can I get another lower high here and maybe a candlestick that says this is over and let's go down some more? Okay, so for the moment, yes, you have an impressive looking bullish candle, but faced with the high from earlier, okay, faced with the high from the Asian session, faced with the 21 exponential moving average, what we would like to see would be an argument that says, let's go short again. So I don't have that yet. What we would like to see then are candlesticks that says, yes, we can sell your euro already. What about buying this? The point here, okay, why don't I suggest buying this? Again, proximity to a previous high, proximity to moving average tells me that going long is not such a good idea at this point. Not when we don't actually have any catalyst to move the market during the next couple of hours. Not when you have potentially good data from the US that would argue look for a bear market. So for now, no immediate action. Let's see how the latest, okay, we have the close of the previous R. So let's see how this candle develops. If this were to turn out into some form of a doji or a shooting star, then I would be a willing seller. Buying this, not at this point for me. Let me see prices test my daily bullish trend line, and I will take up the buy side from that price area. But from where we are only focused on looking for a sell. What about selling a bearish engulfing? Fine. If we end up with the close of the next R below the body of the previous candle, then yes, that's a bearish entry signal for me. Again, buy side, I'll just stay out of it. Not from the current price level. So while the overall trend for euro is bullish in the big picture, we seem to be in a counter trend in the intraday charts right now. We just need price action to say that it is a good idea for you to take the sell side of euro already. Let me just take a quick look at how this chart would actually look like if I put in some stochastic. Yeah, stochastic is actually generating a bullish cross at the moment. So folks, we're not going to do anything with the signals that we're getting from stochastic. Your price action has been bearish in the hourly charts. We are looking at mean reversion happening from the daily charts. So the better course of action for us would be on looking for an excuse to sell our euro at some point later on. Okay, so no immediate action in euro. Let's take a look at the broader market and let's see where else can we go. What looks interesting? Dollar yen. Okay, Canadian dollar, because we've got that data later. All right, I'm just looking for, okay, there we go. CAD. Okay, so we have an interest rate decision from Canada later. While forecast calls for flat rates, people will be focusing on the conference that happens after. If you look at your chart, you are barely moved for today. Okay, let me just zoom out a bit. This isn't actually looking like it's a very nice chart. It seems that we've had a phase of a nice uptrend back last year, but ever since we've been consolidating, and then break lower, consolidate and break higher, consolidate and break lower. So I guess the question for us now is, how do we deal with the latest consolidation? Is this going to break lower or is it going to break higher? And our catalyst for that, our excuse for a breakout, will be potentially your rate decision later. Of course, if during the press conference, the tone from the BOC is bearish, if the tone is dovish, meaning if they start talking about the need to provide support to the economy, okay, you need to put in some safety nets. That's code talk for a central banker to say that I'm not going to do anything right now in interest rates, but I might actually do something in the next few months. I might have to do something in the next few months because of the tariff wars and its effect in the supply chain. So if we end up with a hint of, let me lower my rates, then the impact of that kind of fundamentals is for the Canadian dollar to weaken. And we find that interesting because right now, your charts are basically just off the lows. You've been stuck in a consolidation. Let me check average ranges. So your ATR is about 75 pips. And today you have highs at 37.31, lows at 37.05. So you've only had 26 pips of price action, 1/3 of your ATR. So, and I look at this chart and I'm thinking mean reversion could be the theme later. We go back to your exponential moving average line. Especially if data comes out, or rather, if the interest rate decision and the press conference suggests that the Bank of Canada is very much concerned about what's happening in the economy, about the need for flexibility. The need for flexibility means that an openness to lower interest rates when it finds it necessary as a defense against the global disruptions that's going on. So that kind of talk would see us thinking in terms of pulling back to the moving average line. Besides, if that happens, that gives you a daily double bottom pattern to work with. And traders like to see these patterns. They don't necessarily actually take the textbook suggestion on what happens or on what you should be doing when certain patterns happen, but there's always this strong tendency to try to see a pattern through. Meaning, okay, it looks like we could develop a pattern. Let's get it to the brink of a breakout point, basically complete the pattern, but not actually break and reverse the market. So what we're saying is, for today, we have the elements of trying to get to the moving average line for your daily USD CAD chart, weaken the Canadian dollar. Weakening Canadian dollar means that, or would result from a suggestion that rate cuts will be forthcoming from the Bank of Canada. Now, okay, so we're saying that a scenario for a double bottom, a scenario for mean reversion towards the moving average line is there. But when do we enter this? How does this chart look like when we go intraday? It's one of those boring charts, actually. You go hourlies and you can basically define your consolidation as this. What am I saying, guys? I'm saying that we could, if we want to play it safe, we could use a break of yesterday's high, a break of 37.43 as an entry point. We could use something like a hammer, dragonfly doji from here, or maybe even just a high wave doji, an indecision candle as it hits the consolidation low as an excuse to think about taking the buy side of our USD CAD. So we're not advocating any immediate action. We tend to think that if you have to, then best to wait for a break of 37.43 as your entry point. You could put a buy stop there. If you're eager to join the buy side, thinking that you could have a dovish Bank of Canada later, then yeah, just find yourself near that previous consolidation lows and try to take the buy side from there. So folks, we're not going to take any immediate action. You'll have to wait really for data. That data or that press conference will be about 7 hours and 15 minutes from now. So plenty of time till then. Who knows? Maybe you get good prices, you get hammers from 3700, 3701. And yeah, those are good price levels to go look for a bounce from. A consolidation low. All right, let me go back to overview. So it's really quiet right now. I guess people are waiting for your ADP non-farm data from the US later. People are waiting for your rate decision of Canada. People are waiting for your ISM data from the US later. Okay, I'm trying to figure out which chart should we be looking at. I'm tempted to look at Ethereum, but I don't really trade crypto. Here, let me take a look, because we have a nice looking chart in Ethereum here. So why do I say we have a nice looking chart? It doesn't look like your, it looks like your moving average line actually is respected. If it breaks, it breaks. It's not in the middle. And if I look at this chart, we can argue that we have this consolidation, but we've bounced off the moving average. You're in the middle of your consolidation. You had a very bullish candle yesterday, so one can expect for this to try to test your consolidation resistances. So let me just see, guys. Again, I don't really trade crypto, but at the very least, continuing with this consolidation is something that has to be in the back of our minds. I look at this and I'm thinking, you could even argue that you have a triangle, an ascending triangle in your chart. Now, what's an ascending triangle? Ascending triangle basically is this. And ascending triangles happen when you have a relatively steady resistances, steady highs, although there was this brief break of that. And then you have a pattern of higher lows. ultimately that pattern of higher lows communicates the idea that we will be able to eventually overpower your we will be able to eventually overpower your bears, and we should be seeing an eventual bullish breakout. Okay, will that happen? Like I said, I'm not really a crypto trader, but you have a nice setup at the very least to test the highs from last week. I'm not sure if there's going to be a bullish breakout, but at least test that. Okay, what could lead or what could be a cause for a bullish breakout here? At this point, crypto really as an asset class isn't like your currencies or your other commodities. But any hint of the US Fed flooding the markets with money would be the catalyst that you need to see another surge in your crypto prices. But enough of that. And let's see where we can go. Okay. Okay, silver has had a nice break, but honestly, I'm not, I'm not really aware of the fundamentals for silver. Why did it break out by so much? You know, this looks good actually. This looks more like a bullish, just a simple technical breakout than anything else. But let me compress this. How high is our silver chart right now? Okay, this is actually approaching historical highs. So, yeah, okay. I'm not the type that likes to see charts near historical highs. Okay. So the big question is, can we sustain that bullish breakout from Monday? We don't have any silver specific news to cause this the extent of this breakout. So I'm thinking about that. And given the proximity to historical highs without a catalyst, I'm thinking more in terms of, do we have the technical argument that says pull back to your moving average, mean reversion happening? Now the dailies, I don't know. Let me put some stochastic, see if it's is overpriced already. Well, the charts are overbought, but nothing there that says it's time to short. Candlesticks, yes, we can say that this is a hanging man, but hanging mans are not really very high probability charts. Okay, so this is a hanging man here. This is a bearish signal, but it's not high probability. So what I want to see is, at least on the intraday scale, is there argument that says, yeah, this is going to pull back. Hourly, okay, this doesn't look good, guys. Hourly, you're very tight candles there, very indecisive candles. You're also oversold already. So, okay, if you really want to do something here and you want to look for that mean reversion, I would look at a break of 34.38, the lows for the day, as your catalyst to drop, to ease lower. But you know, that's a very really rough analysis on what's going on with the chart. I just don't like the idea of being at historical levels or nearly at historical levels without any catalyst, without any reason. So yes, silver charts are vulnerable for now for mean reversion plays in the daily chart. Mean reversion in the dailies means that, can we drop all the way down to 33.32, 33.329? Can we ease back to our previous consolidation resistance at 33.69.7? So it's a good idea to look for this to pull back towards your moving average. You don't have the catalyst for higher prices in silver. Okay, in fact, let me take a look at that. Let me take a look at our silver. Is this something that I can short? So there's our chart. About 20 pips. Wow, $1,000 pip value. Okay, $59 pip value, that's still too big. $19 pip value. So if I go in, I'll be down 40. Okay, here's what I'll do, guys. I'll put a sell stop in silver. I have to limit my target profit to, that's really a big, okay. Let me adjust our trade size. Let me just do 2,500 ounce. So we're going to short silver. Our target is to, well, if you're trading a real account, then our target would be to get this to ease towards the moving average line. Given that we're using a prop, I have to limit my expectations to right about just under $1,000. given the consistency rules that I have to deal with. Now, stop loss ideally should be above the high here. We go hourlies. That's really above the day's high. So we'll see what happens. Okay, so this is just a waiting game for us at this point for silver, guys. Alrighty, let me go overview. Oh, by the way, actually we're running out of time, so let me just plug in. Later today, I'm going to have another webinar. This one on making robots. So basically, we'll be having a webinar later about how to make a trading robot. That's going to be in about 4 hours time. Okay, so in 4 hours time, we will be discussing how to make a trading robot. This time, we are going to make a trading robot that will address one of my pet peeves. So one of my pet peeves in trading is this. Say, okay, let me open euro because I like the euro. You are looking at the euro chart. Now, say that I don't have time and I'm looking at this euro and I'm thinking, hey, I actually want to buy euro once it gets near the daily trend line, once it gets near your 21 EMA. 21 EMA is at 1.1320. So oftentimes I just want to leave a buy limit or a sell limit, but I don't really want to jump in the moment that prices hit my particular price level. I want to jump in only if the charts or if there's a signal that says it's time to buy already. And you know me, I always like to look for hammers, shooting stars. Now, they're not perfect, but I tend to feel more comfortable if I trade when I see these candles. Gravestone Doji. Shooting stars. Another one here. Or not that. So what I'm trying to say is I want an indicator or I want a robot that will buy me, say at one point at this level. What was this again? I want to buy at 1350, but I want to have a price action signal that says it's a good idea to buy already. So meaning I want to have a hammer or a shooting star, gravestone. Sorry, I want to have a hammer or a gravestone, rather a hammer or a dragonfly doji. Once prices have hit that level, and only open a buy if that hammer or that gravestone doji has popped up in my charts. So that's what we'll be doing later in our webinar. We will be building. This time we're going to use CTrader. We're going to make a CBot. So we will be making a CBot on how to open or how to make a CBot using candlesticks and using limit orders. Again, this webinar is about how to make EAs, CBots, find scripts without having coding knowledge. So we will be using generative AI to make the robots that we want. Okay, so once again guys, thank you for joining us, and I will see you later for that class.